Investing in stocks is a way to make your money grow over time. By regularly putting money aside to invest, you can see its value multiply over the long term. That's why it's important to begin as soon as you have the money to do so. The longer your time horizon, the better. This article takes you through how much you need, what stocks to choose, and the other basics of investing in stocks you need to get started, all in 10 steps. Whether you have thousands set aside or can invest a more modest $25 a week, you have enough to begin. Before we start the video, make sure to like our video, share this video with your friends and family member, and subscribe our channel for upcoming videos. Begin by reflecting on what you want to achieve financially. You might have short-term goals like saving for a home or a vacation, or have long-term objectives like securing a comfortable retirement or funding a child's education. Your objectives will depend on your life stage and ambitions. Younger investors tend to focus more on growth and long-term wealth accumulation, while those closer to retirement typically prefer income generation and capital preservation. Determining how much you can afford to put in stocks involves carefully and honestly assessing your financial situation. Don't worry if your funds are less than you would wish, just like you shouldn't berate yourself for not being ready for a race on your first day of training. So too, you're just at the beginning of your investment journey. This is a marathon, not a sprint, and you've got a long way to go. Understanding your risk tolerance is a cornerstone of investing. Gauge your level of comfort with the inherent uncertainties of the stock market. Your risk tolerance will differ depending on your life stage, financial goals, and your financial cushion for potential losses. Everyone has a different relationship with money. We've seen how this affects your risk tolerance. But investors also have investing styles that best suits them. Some prefer an active role, meticulously poring over the last cell on the spreadsheets for their portfolios, while others opt for a hands-off, set-it-and-forget-it approach, trusting their investments will grow over time if they just leave them alone. Some just might not have the time to be active traders following the ticker crawls and latest reports on investing platforms. It's important to recognize that your style might evolve, but you'll need to start somewhere, even if your choice isn't set in stone. You've figured out your goals, the risk you can tolerate, and how active an investor you want to be. Now it's time to choose the type of account you'll be investing through. Each has its own set of features, benefits, and drawbacks. Besides reputation and fit with your investment strategy and goals, broker fees are the most important consideration when you're choosing a brokerage firm, which comes in the next step. Let's prepare. Traditionally, brokerages have charged fees through trade commissions, account maintenance fees, and fees for additional services like research or financial advice. However, the landscape of brokerage fees has evolved significantly in recent years. These offer a full range of traditional brokerage services, including financial advice for college planning, retirement planning, estate planning, and for other life events. This customized advising justifies the higher fees that they typically charge, normally a percentage of the value of your transactions, a percentage of your assets under management, and sometimes a yearly membership fee. Minimum account sizes can start at $25,000. Choosing the right stocks can be daunting even for experienced investors. Beginners should look for stocks that have stability, a strong track record, and the potential for steady growth. Don't start out of the gate with a risky stock, thinking you'll hit it big right away. Investing for the long term is mostly slow and steady, not fast and rash. Here are some stocks that are solid bets to begin. Investing in stocks is an ongoing learning experience. Even the most successful investors are learning new tips and strategies each passing day. As the stock market continually evolves, staying up to date and going back to step one and reviewing your goals, available funds for trading, investment style, and so on will be key. Beginners can start investing in stocks with a relatively small amount of money. You'll have to do your homework to determine your investment goals, risk tolerance, and the cost of investing in stocks and mutual funds. You'll also need to research brokers and their fees to find the one that best fits your investment style and goals. Once you do, you'll be well positioned to take advantage of the potential stocks have to reward you financially in the coming years. Your portfolio, like a garden, needs regular upkeep to thrive and reach its full potential. It's a bit like having the green thumb in the financial world, where your efforts and patience can lead to a bountiful harvest of financial success in the long run. Just as you tend to your garden with diligence and care, Your portfolio deserves the same level of attention to help it grow and prosper. Preparing for market volatility is like a roller coaster ride. It can bring a mix of emotions and sensations. There are moments of excitement and anticipation as the market takes unexpected twists and turns, much like the thrill of a roller coaster. However, there can also be moments of anxiety, especially when the ride gets bumpy, similar to the unease that can come with market fluctuations. Just as you hold on tight during a roller coaster ride, investors often need to stay steady and maintain a long-term perspective during market ups and downs. It's like experiencing the ups and downs of life. If you enjoyed our video, kindly give it a thumbs up. Please subscribe to our channel and stay tuned until you begin your online earning journey. Thank you for watching, and we look forward to seeing you in the next video.